Hi guys, you are welcome to my channel. Today we'll be looking at how we can trade gold using the pivot point analysis. To use the pivot point analysis, we will review the pivot point, the support and resistance levels on the daily time frame. In order to calculate the pivot point, follow the steps below. Pivot point, PP, is equals to high price plus low price plus close price. The summation of this three divided by 3. Okay, so if we go to the chart, the blue line, this blue line is our pivot point. To calculate the pivot point, the high price of the daily candle, okay, this is the high price, plus the low price, this is the low price, okay, this is the high price at this point, the low price at this point, okay, plus the closing price, the last candle on the chart, daily chart, the closing price is around here. Okay, so the summation of these three prices divided by 3, that will give us the calculation of the pivot point. All right, the first resistance calculation for the first resistance 1. Okay, going to the chart, this is our resistance. Let me take this out. Okay, this is resistance 1. All right, marked in red. The calculation for the first resistance, going to the calculation, first resistance R1 is equals to 2 times pivot point minus low price. So whatever we get from the calculation of this pivot point multiplied by 2 minus low price, this is the low price, at this point. All right, so calculation is 2 times pivot point level minus low price. That should give us the resistance 1. Okay, so that's that for R1. For the first support 1, S1, the calculation is 2 times pivot point minus high price. Going to the chart, these are pivot points. We want to calculate support, the first support, this first support, 2 times, from the explanation, 2 times pivot point minus high price. This is our high price for the last daily, this last daily candle. These are our high price are at this point, 2057.57. 2 times pivot point minus high price will give us support 1, S1. All right, calculating the second resistance R2. This is our second resistance. Let me remove this. This is our second resistance R2. To calculate this second resistance, the calculation, the formula for second resistance is pivot point plus, in brackets, high price minus low price. Pivot point plus high price minus low price. So going back to the chart to calculate this pivot point, these are pivot points, okay, plus high price is high price for the last candle, daily candle, minus low price, this is low price. Okay, looking at the calculation, pivot point plus high price minus low price. To calculate support 2 on the chart, this is support 2. All right, this is our second support. The calculation is pivot point minus high price minus low price. So going back to the chart, this is the pivot point, all right, minus high price. These are high price around here. Let me remove this. So pivot point to calculate this support 2. Pivot point, these are pivot point minus high price, the high price, this high price 27.50 minus low price, this low price 27.67. That will give us the calculation for this support 2. All right, that's that for support 2. To the next calculation, third resistance R3. To calculate R3, this is the R3, the third resistance. To calculate the level, the calculation is high price plus 2 times into bracket pivot point minus low price. High price plus 2 times into bracket pivot point minus low price. So going to the chart, high price, these are high price. High price for the last candle is 2057. All right, plus 2 into bracket pivot point, 2 into bracket pivot point minus low price. Okay, so that should give us this resistance 3, the calculation for resistance 3. Now to calculate support 3, this is the support 3. Let's go to the calculation formula. Low price minus 2 into bracket high price minus pivot point. Low price minus 2 into bracket high price minus pivot point. So we go back to the calculation. This is the low price. This, let me remove this. This is the low price. Let me remove this. All right. This is the low price. Okay. Low price minus 2 into high price minus pivot point. Low price minus 2 times into bracket high price. This is our high price. This is our high price. Okay. Minus pivot point. Minus pivot point. So that should give us this support 3. Now that's how to calculate manually calculate the pivot points, the resistance levels on the daily chart, and the support levels. So you can use this same calculation to calculate for other time frames. It does not really have to be only the daily time frame. You can use it to calculate on the weekly, monthly, 4-hour time frame, 1-hour time frame, 30 minutes time frame, 15 minutes time frame, 5 minutes time frame, and even 1 minute time frame. Okay, but for gold, it's best to calculate on the daily time frame. All right. So that's that for the calculation. Now, the pivot point itself with the resistance and support levels is best used when market is trending. Okay, looking at this particular move, market was trending upward. So at the breakout of this particular trend line, and you can see progressions, it's best to use pivot point around pivot points and resistance and support levels around this point. All right, also you can see a downward trend around here. It's best to use it when you have the breakout. There's a breakout of this trend around here, so it's best to use pivot point at the breakout. And as much as you have breakout, you can use pivot point, support and resistance level to trade the trend. We also have another trend around here. and the breakouts around here. So it's best to apply pivot point around here. Also another trend, you can see another trend still on the daily time frame. The breakout appeared around here, so pivot point can be used when market is trending. But for now, market is trending upward, but we have like a range. We have a range. We have a range somewhere around here. So it's not clear if market will actually go up or drop. But from what we can see, okay, from here, it's most likely trending upwards. So by the time we have a breakout, it's best to use pivot point. So let's go to a diagram I'm going to show us right now. Okay, bullish scenario, when you see a trend, market trending upwards, and you have your pivot point, you have the support levels, and you have the resistance levels, and then market, the price opened above the pivot. The next day price opened above the pivot. All right, so it's best to enter around here above the pivot point, and then target resistance 1 as your take profit 1, resistance 2 as your take profit 2, resistance 3 as your take profit 3. Don't forget, the market is trending upwards, and you are looking for how to calculate or mark your take profit in an uptrend. You can calculate the pivot point for the previous day daily candle, the pivot point, and the support and resistance levels for the previous daily candle, and then mark your TP1 as your R1. The R1 is your TP1, R2 is your TP2, R3 is your TP3. Now for the stop loss in an uptrend, your stop loss will be the midpoint between S1, support 1, and support 2. And in a bearish scenario, as like opposite of what I've just said, you use pivot point analysis to mark your take profit and stop loss in a downtrend in a bearish scenario. So your entry would be at, if the previous daily candle closes below the previous pivot point, your entry will be at the opening price of the next day candle, of the day's candle. Then you target support 1 as your TP1, support 2 as your TP2, support 3 as your TP3. Of course, the midpoint between the resistance 1 and resistance 2 will be your stop loss. All right, in a downtrend. So that's the way to make use of pivot point. Of course, we can also use candlestick patterns. If you have a bullish engulfing pattern around here, you have the previous, if you have the previous daily candle closing as a bullish candlestick, all right, and you have the closing price above the pivot point, and the bullish candlestick is engulfing the previous day candle, and then you are able to calculate your pivot point and mark the pivot point, this resistance and support levels. Then you can follow this pattern for the markup of your TP1, TP2, TP3, and obviously your stop loss. Of course, in a bearish scenario, if you have the last day candlestick as a bearish engulfing candlestick, engulfing the previous day candlestick, and the closing price is well below the pivot point. You can mark your TP1 as the as the first resistance, first support as your TP1. The second support will be your TP2, and the third support will be your TP3, your take profit 3, and then the stop loss will be at the midpoint between resistance 1 and resistance 2. So that is a way of using pivot point analysis to trade gold. Not only can you do that for daily candlestick, you can do it for the 4-hour candlestick. Let me remove this. You can do it for the 4-hour candlestick. Let's go to the 4-hour candle, 4-hour chart. Okay, like we have an uptrend, all right, and somewhere along the line you're able to calculate your pivot point. You can let's assume you are calculating pivot point for this particular candlestick. This is your resistance 1, this is your resistance 2, this is your resistance 3, and let's say this is your pivot point. Okay, let me change the color to blue. Okay, let's say this is your pivot point, and this is your support 1. I'll change the color to green. Support 2, support 3. Okay, so the TP will be resistance 1, your TP1 will be resistance 1, your TP2 will be resistance 2, your TP3 will be resistance 3, as soon as the next 4-hour candle opens. And then your stop loss will be the midpoint between support 1 and support 2. Okay, for the 4-hour calculation, let's look at this evening star candlestick pattern. I'm talking about this. All right, you can see this bearish, long bearish candle. So if market if the 4-hour candle, if the pivot is calculated around here, and you have your support 1 around here, your support 2, we've just calculated for, in an assumption, just calculated pivot point, support and resistance for this particular candlestick, assuming this candle has not opened, and your support 3 is here, your resistance 1 is here, your resistance 2 is here, your resistance 3 here. So let's assume everything here has not happened. I'm talking about let's pretend as if all around here has not happened. Okay, so this is the last candlestick, and you can see it's like this 1, 2, 3, the formation is like that of an evening star, and you're able to calculate the pivot point, support and resistance level for this last candle, and this has just opened around here. So your TP1 will be this, your TP2 will be this, and your TP3 will be this, and your stop loss will be placed around here. Okay, so that's that for pivot point analysis. Okay, let's look at another scenario. Okay, we have a downtrend. We have this particular uptrend, all right, and then we have a breakout, and price progresses. This is a 4-hour time frame. This is a 4-hour chart. Price progresses up to this point. All right, let's assume that everything here has not happened. Okay, assuming that everything in the green color has not happened. The last candle is this candle. We have a breakout. Okay, we have an uptrend, then a breakout of the trend line to give us a downtrend formation, start of a downtrend formation. So calculating the pivot point of this 4-hour candle, this very 4-hour candle, let's say the pivot point, you get your pivot point somewhere around here. You get your support 1 somewhere around here, support 2 somewhere around here, resistance 1 somewhere around here, resistance 2 somewhere around here, and resistance 3 somewhere around here, and then probably support 3 somewhere around there. So this candle has not formed, this has not formed, all these have not formed, and your last candle is here, and you calculated pivot point based on this last candle, and this is what you get. So your TP1 will be support 1, your TP2 will be support 2, your TP3 will be support 3, and your stop loss using, let's make this a black color, will be the midpoint between resistance 1 and resistance 2. Okay, so only if you have an uptrend and price breaks the trend, and you have a breakout and price has started to trend downwards. So as you have calculated for this, you can, once this plays out and you hit the price hits support 3, you can also calculate for this candle. So let's assume everything here has played out up to this point, and you have, your price has closed, has hit your support 3. You can recalculate, and then for pivot point for this, and then of course you get support 1, you get support 2, you get support 3. All right, and then you get resistance 1, resistance 2, resistance 3. Okay, for this particular 4-hour candle. So you expect price to hit TP1. This will be our TP1. Okay, I think let me just make it this way so that we can understand it better. So this will be our TP1 at the open of this next candle. This will be our TP1, and this will be our TP2. Okay, and this will be our TP3. All right, at the open of the next candle, this next candle. Of course, when this next candle opened for this long bearish candlestick, it opened as a, and it closed as a bullish. The next one closed as a bullish, and this one also went up above the pivot point, but our stop loss is already marked between resistance 1, this resistance 1 and resistance 2, so it didn't get to the stop loss, and then we'll see price taking all the take profits. So that's that for pivot point. This is for the calculation, and this is the explanation. Okay, and this is the illustration. You can use this for any instrument, provided you are able to mark your trend and you are able to identify the break of the trend line, and then you can see price progressing. You can easily, as much as you see price progression, you can easily start your calculation at any candlesticks. Okay, as you have for downtrend, you also have for uptrend. All right, for uptrend. So that's that. Don't forget to subscribe to the channel. like the video, share the video to your friends and loved ones. See you.